Good afternoon, everyone. Anthony Alaka with Torrey Hills Capital, and welcome to the Cerrado Gold webcast for March 15th, 2023. Hope everyone's doing well. Thanks for taking the time to join our virtual lunch. We're very excited to bring you Cerrado Gold. They are a Toronto-based precious metals mining and exploration company with two main assets in South America. The company's Minera Don Nicolas project is located in Argentina. It's a newly producing gold and silver mine with significant optimization, expansion, and exploration potential. The company also owns the Monte Do Carmo gold project in Brazil and is expanding on the high-grade mineral resource base through extensive exploration with a PFS expected in Q2 of this year. Company trades on the OTC market under the ticker CRDOF and on the TSX Venture under the ticker CERT. It's currently trading with a market cap of only about $50 million US. The company has shown strong production growth so far at its mine in Argentina, and its property in Brazil is online to start production late 2024, early 25. So we feel there's plenty of upside in the stock as the company continues to execute its strategy. With us today to discuss Cerrado Gold's operation and growth strategy going forward is the company's VP of Business Development, David Ball. It's great to have you on today, and thanks for taking the time to bring our viewers up to speed on Cerrado Gold. Obviously, a lot of exciting developments are happening with the company and the sector, as we could see how gold is reacting today to the market fallout. And I'm excited for you to share those with our group. Before we get started, if anyone has a question, type it into the Q&A or chat box. If you can't do that, click the raise your hand icon and you can ask David directly. So with that said, I'm going to turn it over to David Ball. David, the floor is yours.
Thank you very much, Anthony, and thank you everybody for your time today. So I guess the first way to introduce Cerrado is to say that we are a relatively new company. We've been trading now for just over 2 years on the Toronto Stock Exchange, but the history of the company is really founded in Brazil, and a wealth and history of experience from the management team in Brazil. And thus the company was founded on the back of our Monte Do Carmo asset. It was brought to us by two geologists. These two geologists have known the management team for a number of years, and we've kind of followed them quite closely with their discovery of Belo Sun's asset, which is now the largest undeveloped gold asset or gold project in Brazil. We followed them from basically creating that company and generating sort of 9 million ounces through the drill bit. And when they brought this project to us, they said they saw a similar sort of pattern emerge, and we obviously were excited by that opportunity. We put the project into the company. We did a bunch of drilling, and we delineated a 1.3 million ounce resource down there in Brazil. And in 2021, we put a PEA on that, and that's really sort of highlighted the potential, the superlative economics of this project. Now, before we went public, just over 2 years ago, we're also presented with an opportunity to purchase an asset in Argentina. This was a producing asset at the time, owned by two entrepreneurial Argentinian gentlemen that were operating it as best they could. They'd spent $100 million or so on putting a very nice state-of-the-art gold plant down there in Santa Cruz. But they couldn't really get the mill running at optimal levels. They couldn't get the grade up to where they thought it should be. And as a result, they were producing circa 20,000 ounces of production at all-in sustaining costs above the gold price at the time. Now, when we took a look at this asset, we saw a really interesting asset in terms of being able to be turned around quite quickly. Our management team took over the asset and then subsequently increased head grade, increased throughput, increased recoveries, dropped operating costs, which all really culminated in our production rates last year of 50,000 ounces. So we more than doubled production there in a short period of time. And we should get our all-in sustaining costs out in April, which look like quite strong as well. But both of these assets, I should also say, despite being very well developed and quite advanced in the sense that Minera Don Nicolas is in production, Monte Do Carmo will have a bankable feasibility study out in May this year. Despite these assets being very well advanced, they are still very much in the discovery stage, which is what really attracted to us. So we don't think these assets are grown up by any stretch of the imagination. We think there's lots of exploration work to do and lots of growth potential in both of these assets. I mean, just anecdotally, we have a property down in the Deseado Massif there in Argentina that's roughly the size of Rhode Island. Now, a lot of that's going to be moose pasture, I guess, but there's a lot of work to do there to figure out what this asset's going to be when it grows up. Similarly, with Monte Do Carmo, we have a very large land package down there in the Tocantins state. We've delineated about 30 kilometers worth of mineralized trends that we know of. And our existing resource sits in about 1 kilometer of that. So plenty of work to do, both on the exploration side, but as well as development. Just delving a little bit deeper into each of these assets. Monte Do Carmo is really, as I mentioned, the flagship here. And what makes that the flagship is really the economics that were surrounding the PEA that we put out in 21. Net present value of $620 million US and an after-tax IRR of 95%. Really, really, really strong project in terms of economics. One of probably the best returns of capital that you can look for at a gold project anywhere in the world. And what's driving that really is not any genius that we've brought to the project, but just luck, in the sense that our mineralization is very clean, very easy to process. We're in a great jurisdiction that has lots of infrastructure that we don't need to build, and thus CapEx, OpEx, and all the things that go into the project will be very low. And we should see a very, very rapid return of our capital, and that's what's driving that IRR. Again, this is a PEA, and we'll need to sort of confirm a lot of those numbers in our bankable feasibility study, but it's looking quite good. Probably hard to replicate those numbers, but at any stretch of the imagination, this was going to be a very, very robust gold project.
I'm assuming that what will change is maybe the CapEx a little bit with rising inflation, maybe since the PEA was out.
Yeah, so like many of these things, there's some ups, there's some downs. I think inflation is certainly a theme that can't be ignored. However, we might actually see our CapEx come down, and I'll explain that in a little bit, but mainly because we're kind of reducing the capacity of the plant to push the production over 10 years. We'll go underground in the later years, which drops our operating costs quite substantially. So we'll actually possibly see both CapEx and OpEx either stay the same or come down a little bit.
Wow.
The NPV may come down a little bit in terms of just stretching that production out over a longer period of time. Some changes in head grade and things of that ilk. But I think we're still looking at 70 to 80% IRRs, right? Which is incredible.
Phenomenal. That's great.
Yes. And then similarly in Minera Don Nicolas, the story there is really about our short-term growth. We did 50,000 ounces last year, 53,000 ounces, I guess, on a gold equivalent basis. And we're really growing that project quite rapidly in the short term by putting 2 successive heap leach projects into production. So all of the gold here is very high grade epithermal gold. We're running sort of plus a head grade of sort of 5 to 6 grams per ton through our mill, but all the lower grade stuff that's lying around has been left. And so by putting a heap leach project in like Las Calandrias, we'll process that lower grade ore and bump our production up to around 60 to 70,000 ounces of production this year. And the second heap leach project will likely bring that to 90,000 ounces in the year below, but again in the following year. Sorry, but again, this is a very large land package in the Deseado Massif, located in Santa Cruz, highly prolific region. All the majors are there, whether it's Anglo, whether it's Yamana, whether it's Goldcorp, whether it's McEwen, and Hochschild and Core. We're surrounded by the majors there. We have a huge exploration package down there. Lots of work to do this year in terms of exploration, but I'll dive into that a little bit later. Again, this is just the company's growth profile. So I mentioned in the very short term, our Argentinian operations are driving that growth. But once Monte Do Carmo comes online in 2025, that's going to where you see the step change in both production and operating costs that will really transform us into a very large, well, not a very large, but on the larger scale of production, and very much so a low operating cost producer. Why should you believe that we can do all of these things that we say we're going to do? Well, because we've done them before, basically. Both Mark Brennan and Kurt and Robert on our board were deeply involved in desert sun mining. They acquired the Jacobina project, brought it out of hibernation, brought it back into production, and then sold it to Yamana for just under 600 million Canadian in 2006. That was about a 25 bagger for guys that were in the shares early on. Again, the team then moved over to Largo Resources, where they discovered the Maracás project, which is the highest grade vanadium project in the world. Both these assets are in Brazil. Kurt's our main guy in Brazil. And this will be his third or fourth project that I believe he'll put into production. So when he says he's going to do it for $130 million worth of capex, and he's going to get into production by the end of 2025, we tend to believe that he can do as he says he was going to do. This is and one of the other reasons that we know we can get this thing into production very quickly and at very low operating costs is where we are. Now, for those that don't know Brazil very well, Tocantins is, the first thing you know about the Tocantins state is that it's actually it's quite a wealthy state and dominated by highly industrialized agriculture. So, very large corn, soybean plantations that are then, surrounded by factories that produce both corn oil and soybean oil. We are nowhere near the Amazon, which is important to note. But it really, in terms of locality, you couldn't ask for a better place to build a mine, in the sense that we have a power line running through our property. We're 2 kilometers from a paved road. We're 5 kilometers from the highway that runs up and down Brazil. We're 45-minute drive from the state capital of Palmas, that has around a 300,000 population. And the other thing that's fantastic about being located in Tocantins is I guess the permitting side of things. So in most places in the world, you have state level permitting and federal level permitting. And similarly, you have that in Brazil, with the exception of Tocantins. So Tocantins actually has its own environmental agency called Naturans. They have been, I guess, mandated by the federal government to run all of this permitting. And so we really have one level of government that we need to liaise with, and we can do all our permitting with the one state.
David, can I just interrupt you for a second while we're talking about Brazil?
Sure.
One of the questions that came through is for the Brazilian property. Are you anticipating any material increases in mining taxes by governmental authorities?
We are not. We have had conversations with the state government around royalties and other things. But Brazil has been if anyone, Brazil's main, I guess, source of income is mining, right? Iron ore, oil and gas, followed closely by agriculture. So they'd be hard pressed to do anything that would substantially hurt that industry. But then again, they are governments, and they are always figuring out ways to increase their revenue base. So we have had conversations, but I think if we do have a change, it won't be major. Great,
thank you.
So this slide just highlights the prospectivity of our property. What we see here is Serra Alta on the right, and you'll see all those little white areas are historic Conquistador and Garimpero workings. Serra Alta, as it stands right now, runs about 1 kilometer in strike. That corresponds to this tiny little box down here on our property. And you'll see that we have, in this black dotted line, mapped out the kind of mineralized trend that we've studied. And you can see here all these little gold showings here, these little stars are areas that we know there is gold that we need to follow up and drill. And then there's another trend here, Division and Bit 3. So, when these two geologists brought this project to us, they said there's 10 million ounces, here. And that's why we kind of tend to agree with them, is that, you know, there's a lot of evidence of gold on surface here. There's a lot of historical Garimpero workings. We now understand the deposit very well. And so that'll drive our exploration campaign this year. And we're looking forward to add, you know, 1, 2, maybe 3 more Serra Altas in the short term. So what really drives the attractiveness of Serra Alta is a couple of things, right? We have a pretty high grade resource here of 1.84 grams per ton. And that's very high grade for a South American open pit project. The real is running 5-to-1, which makes operating and building anything in Brazil quite cheap. But what really drives it for me, I guess, is the fact that this is a very clean ore. It's free gold. So essentially all we need to do to get to about 80% recovery of the gold is to crush it up and run it through a gravity circuit or a spiral. So it's literally just adding water to the crushed ore, running it through a spiral, and we get to 80% gold recovery that way. We then concentrate and run the rest of the ore through a CIL plant. It basically means that the back end of the plant is probably 15% of the sort of start of the size of the plant. And that means we've got a very low operating cost, a very low capital footprint, and a very, very low environmental footprint. Low cyanidation numbers, all that sort of thing that makes it, you know, a very green and easy project. And that's what's really driving the fact that this is, you know, a 95% IRR project. Again, it's nothing we did special, it's just luck. Just to highlight how special that project is, you know, we took a look at some of the undeveloped projects around the world, and some of the projects that are, you know, provide some of the best economics. You know, there's one like Tocantinzinho that's into production right now, in construction in Brazil right now. Possibly the highest grade open pit large scale project, Ikari Rupert Resources project in Finland. And Monte Do Carmo kind of exceeds all of them in terms of return on capital. So, you know, what that means for me is that if you had $1 to invest in a gold project right now, you wouldn't find a better return on your money than putting it into Monte Do Carmo. That gives us a lot of comfort that, you know, when the bankable feasibility does come out, you know, any movement around the PEA means that this, whatever happens, this will be a very, very robust project and very good return on our investment. It's likely that we'll actually see those returns in a very short period of time. You know, we're scheduled to do first production by 2025. Again, we are very close to receiving our preliminary license in Brazil. Following that, there's 90 days before you receive your construction license, which is the secondary license. We think there's a 12-month build on this project, not much longer. As I said, it's a very small project, very easy. We don't need to build any infrastructure. It's an off-the-shelf plant. And then once that build is finished, we look to put in production, as I said, in 2025, maybe late 2024. It's not going to be a very difficult funding requirement, I guess. I think in terms of this project's economics, going out and securing project financing, you know, in the 60 to 70, possibly even 80% range should not be an issue given the margins of this asset. We have a deal with Sprott Streaming where they would likely give us an extra 25 to 60 million dollars worth of stream to help fund construction of Monte Do Carmo. Now, we may not take all of that, but obviously if we do, we would not need to raise any additional equity to build this project. Now, that's not the best capital mix for a project, but it certainly gives management a lot of option and flexibility in terms of financing the construction. So we're obviously in those discussions right now, and it's going very well. I don't think we'll have any issue raising funds to develop this project in a timely basis. That's the development story for Monte Do Carmo, but you know, I'd be remiss to kind of not touch on the fact that we really think this asset has strong potential to grow from where it is right now at 1.3 million ounces. As I said, with the infill campaign just finished, we really understand Serra Alta quite a lot, and we're bringing that understanding to look at additional potential additional deposits on the project. So what have we learned? We've learned that the gold exists at the contact zone between the granites and the felsic volcanics. We have this large granitic intrusion, as you'll see on the left here, with this sort of pink outline, dashed outline. And where the felsic volcanics hit that intrusion, you see these large quartz veining systems. And you can kind of see that trend in that arc shape around, Gogodonca, Cerro Baru, Capital, all along here. And we know that these continue undercover here, and then obviously towards the east, where they may be a little bit deeper and not showing on surface. But the other lesson, I think, is really that we need to drill these projects. So it took us about 40,000 meters of drilling to get Serra Alta to where it is today. Any of these higher priority targets that we have in our property really haven't received much drilling. Capital probably the most, with just under 7,000 meters. But the rest of them are really, really early stage, and we need to follow up. And that's what we will do this year. So we have a very aggressive budget, I guess, to drill Monte Do Carmo this year. So hopefully we'll see some progress there. I won't touch on any of these targets, but for those of you that are interested, please go to our website and take a look, and you can see some more detail on some of these targets. But plenty of room here to grow our resource base in the near term, and lots of things to follow up on. On Argentina, we're located here in the Santa Cruz province. It's the best province really to do mining. It's down in the south of Argentina. It's a really dry, flat desert type area. So, very easy to sort of get approvals to build projects down here. But it really is quite a prolific area and attractive area, in the sense that it is a very large scale epithermal gold system, very similar to Nevada, to draw a comparison there, but really with, I guess a 200th of, I'm just throwing numbers out here, but a very small percentage of the exploration dollars spent to date. So lots of prospectivity here. And you have some very large deposits already, like Cerro Vanguardia, Cerro Negro, and Cerro Moro, for example. These are multi-million ounce deposits. How did they get that way? Well, we just through the natural progression of developing our asset, we're kind of following a similar trend, right? They start with looking at the open pit, high grade open pit deposits. They're easy to mine. They're very high grade. They produce cash flow very quickly. Then people generally looked at heap leach ounces to process the lower grade material. But it's really when these companies start to go underground that they see very large resource growth. And we're just starting that right now in Argentina. So we have been focused for the last couple of years on really optimizing the operations and turning around the asset. We've done that now. The mining team is humming, the plant is humming, and really now this is the year to focus on growth of both production and in exploration. So again, you'll see a trend here. While we've spent the last couple of years really putting our assets through the development stage, I think this year is going to be focused on exploration and following up on some of that potential we think these assets have, and really that will help us leverage the infrastructure that we have down in Argentina. This is our first heap leach project, Las Calandras. So you'll see here in pink, these are the high grade areas that would normally go to the plant. But all around those high grade areas, you see this lower grade material that is heap leachable, that has generally been left by previous production, and what we're looking to bring into production to build our production rates by to 60 to 70,000 ounces this year. Following that year, we'll have Martinetas. It's our second project, basically using a lot of lower grade stockpiles around the plant to bring that to 90,000 ounces. On the underground side, as I mentioned earlier, that's really where these assets have historically grown in the Deseado Massif. We've only just started to look underground right now. We're drilling now at Paloma, which is our main pit, just under the pit, and we should see a decent sized resource come through in the next couple of months. But that's really where I think the growth in terms of the high grade material is going to come from. Just touching on Argentina, I guess, we understand and we know that there are a lot of difficulties operating in Argentina at the moment with currency controls, which essentially mean that you can't bring your money out of the country. Now, for us, that's not a big problem because we've got plenty of uses of capital in country. As I mentioned, we're building a heap leach project this year, which is now under construction. We're doing a bunch of exploration in country, and we really have a use for all the pesos that we generate there. What we say to investors is, Argentina is a difficult place to do business. Inflation's running at 100% or 80%. The difference between the exchange rates or the official and the black rate or the blue rate is about 100%. So it makes it very punitive to take your capital out of the country. But I think in the short term, a couple of things will happen. So one, there's election at the end of the year, looks very positive, or likely that Macri will get back in. And then if that's the case, then it's quite likely, of course, that currency controls will be removed. Now, if that happens, everybody's happy. But the other thing that you might see now, and we're sort of starting to see evidence of that, is the other guys in the Deseado Massif or in Argentina in general are generating significant cash flow and pesos and haven't been able to do much with it. Now, the first thing they do when these capital controls are put in place is grow their operations, which helps them produce even more cash and more pesos. The second thing they do is, expand their operations again, which produces more cash. But so I think what you'll see is that you might see in the medium term, if these capital controls are not removed, a bit of an M&A wave in country where these larger producers will be looking to find projects to spend their capital on and to spend their pesos on. And, you might say, Dave, well, 90,000 ounces of production in the next 2 years is probably not attractive for a major like Yamana, Pan American, Anglo. But I'll just remind you and say that we have the largest land package there in the Deseado Massif. 300,000 hectares or 330,000 hectares, I should say, is roughly the size of Rhode Island. And I think that really is attractive for a potential acquirer. Now, that's obviously a big if, but I think if one of those two things happens, we'll be happy. And what we say to investors generally is, look, give us a year to figure out what is going to happen down in Argentina, and also what that asset looks like when it grows up. We've got a bunch of exploration work that we need to do, and I think if you give us that year, we'll be able to see a solution in terms of sort of capitalizing on that lottery ticket. So that's the summary there. I see some questions that come through here from James. I'll just read that out from you.
I was gonna, go ahead.
No, go ahead, Anthony. It's probably easier if you do.
Yeah, no problem. How much, in what term are you going to sell into the streaming deal on Monte Do Carmo?
Yeah, so if you look at our existing stream deal, we did 2.25 with Sprott for $20 million. Now that was, some time ago last year, based on the PEA. I think if we do that as part of, if we increase the stream as part of the construction, it may not be the same terms because we're sort of de-risked. Obviously, that's subject to commercial negotiations, but I think I think we probably, in the 20 million range probably makes a bit of sense. Anything we can do to reduce the equity component, given our current share price, is very beneficial to shareholders from a dilution basis. So we're pretty keen to kind of tap that, but again, we're conscious of not overly burdening the asset, which I think with the margins that it has right now, it's probably hard to do, but we're obviously conscious of that.
Yeah. So I guess the follow up to that is, what percentage of your CapEx do you want to cover with the streaming deal? So it looks like it's going to be maybe 15-20% roughly.
Yeah, I think that's roughly right. And look, these things will change. It's all dependent on how much debt we can get in. So we're just starting those discussions now with various providers, but they're going well. Obviously, we kind of want to maximize the debt, add a little bit of stream and minimize equity, essentially.
Yep, absolutely. Other question, with 5 million ounces of gold at Volta Grande in Brazil, and with Belo-Sun's apparent inability to get a mine construction permit, why would you not take your experienced team and do quote unquote another turnaround at Volta Grande? Is that something that you have thought about or looked at?
That's a very interesting question. Volta Grande is a phenomenal asset. Very similar to Monte Do Carmo in many ways, but at a much larger scale. Where it is, however, I think it makes it very difficult to permit. I know the management team have looked at it in the past and kind of said no because of that, from a permitting basis and where it is, just jurisdictionally, in the middle of the forest, and there's lots of NGO activity and indigenous activity there. We don't have any of those issues at Monte Do Carmo, which makes it so attractive. Now, maybe at a point when it looks interesting, but we've got plenty to focus on at Monte Do Carmo right now, and I think it would be much easier to create value by putting Monte Do Carmo into production than to sort of go back to square one in Belo and try and re-permit that operation.
Yeah. So you mentioned earlier that Monte Do Carmo is probably going to be, could it potentially be Q4 2024? Do you think it's going to be most likely 2025?
The potential is always there.
Mm-hmm.
It's very simple. It's literally an off-the-shelf plan. As much as you can do that, a lot of the work is done in country, so there's not a lot of issues with long lead items and things. And Kurt's done this a bunch of times before, so it's quite possible. But we obviously want to be very careful about setting expectations.
Yeah.
Usually the delay is relates to permitting, but I don't think we'll have any of that here because of where we are and because of the simple permitting process.
Yeah. As you ramp up your exploration this year, can you discuss your capital expenditures planned over the next 12 and 24 months?
Yeah, so we in Argentina, the best way to think is kind of split it between Argentina and Brazil. In Argentina, that will not take any money from Canada, so we won't. That is self-financing and self-sufficient. We've raised some debt in country there to help with the heap leach project there, and all the exploration spending. So that is kind of separate. I think that's a smart strategy to give shareholders comfort that we aren't sinking a bunch of capital into Argentina. In fact, Argentina actually helped finance an extra $10 million recently when we helped sort of finance Canada when we put an extra stream on that for $10 million. Then in Brazil, look, the capex is for construction will be in the feasibility study, but that'll be the biggest capital expense item. But we're probably spending around 8 to 10 Canadian in exploration this year in Brazil.
So how much do you think you can expand the Monte Do Carmo, like with the additional drilling? Like what are your expectations, or is it too early to tell?
I think it's too early to tell. I think what we would hope to achieve with that money is to find one or two Serra Alta type targets. We would then, once we have that, we'd have to then go back and do a bunch more drilling, which would mean, a little bit more expenditure. But I think with that $8 million, the idea is to try and find the next Serra Alta. Now, delineating a resource from that is a separate issue, but I think with the 8 to 10, we should be in a position to find one or two more.
Yes. Absolutely. Do you think there could be better valuation for Brazil properties if these projects were in a separate company?
Yeah, yes and no. I don't think the market gives us any value for Argentina whatsoever. But I don't think it's negative on Brazil, because in the sense that it doesn't draw any money from Canada, it doesn't draw any money from Brazil. They're financed independently, so it shouldn't really be hurting the valuation of Brazil itself. In fact, ironically, as I just mentioned, right, that we're actually helping. It's actually helping us finance, corporate and Brazil
Mhm.
by giving
Yeah.
us this additional $10 million stream,
Yep.
which went to Canada. So I don't think so. It's always difficult to answer those questions because you never know what the market is thinking. But I don't think it hurts the Brazil valuation, because I really think there's zero valuation for Argentina in our stock.
Yeah, so that streaming capital that you get though for Argentina property, you can keep in Canada, correct?
Correct. Yeah.
Yeah, that's great. You made a small acquisition, Voyager Metals. Can you discuss the reason why you did that? What your plans are with that project?
Yeah. Look at that acquisition. And as you mentioned, it's kind of opportunistic. We ended up issuing kind of less than 20% of our stock to acquire that asset, but it's an asset that the management team knows very well, and it's an asset that provides us with a whole bunch of optionality, is the way I would explain. It's a great jurisdiction. It's a product that it will produce a product that the market definitely needs, and it's an iron ore project that has none of the negative elements that these large scale magnetite projects have, in the sense that we don't need to build a massive railway. You don't need to build a port or any of those large infrastructure items. So it generates a significant amount of cash flow very, very quickly, and has a really good IRR and return on capital, which is what we care about, right? We're a cash flow focused company. We care about cash, and so we saw that as an opportunity there. And when I say it gives us a lot of optionality. And one of the problems with these large scale assets in junior companies is that financing them from an equity perspective is quite challenging. So if you actually look at the cash flows of MDC and line them up with the Voyager Metals Consortia project, there's a potential here that you could just kind of slipstream both MDC, the growth of MDC into the construction of Voyager, and really limit the amount of equity you'd ever have to raise to put these both into production. Now, if all these assets are in production, you're generating free cash flows, operating free cash flows of $500 million, which makes us potentially a multi-billion-dollar enterprise value company. Now, that's one option. The other options is we finish the feasibility study, we look for other partners. We always retain the option to flip it back out at some point. So it was really an acquisition that really gave us a lot of optionality. We saw a lot of value there, and so by giving up sort of less than 20% of our stock, I thought it made a lot of sense from a financial perspective.
Yeah, so I mean, you're in the decision process of how you're going to move forward with that acquisition, correct?
Yeah, well, I mean, we will definitely. The way you need to do all of these things is to kind of think in the process of a producer, right?
Yeah.
You want to move forward as if you're going to put this into production, but be opportunistic at every step of the development to create value for shareholders.
Yeah, absolutely. You recently added Chris McGinnis, resource geologist, to your team. What is to be his future role and responsibilities?
Yeah, I mean, as I mentioned, we're focusing this year on exploration in both Argentina and Brazil. So he's really helping that effort. He's got a lot of experience with kind of grassroots exploration at Gold Spot. He is quite important in the role of discovering newfound gold's asset. So we're really happy to have Chris on board, and he adds a lot of depth to our exploration team on the corporate side, and that'll really help that exploration focus in the next kind of 12 to 18 months.
Absolutely. Timothy Lee, CFA at Red Cloud, is giving Cerrado Gold 340 Canadian target, which is impressive. You had it on a previous slide. What is your coverage, and what are their targets with other analysts?
Yeah, so we, Hayward covers Kerry Smith is about 250. As you mentioned, Cliff, I think is about 340 these days. But to say that we're under, I mean, every mining CEO is going to come on here and tell you that they're undervalued.
Mm-hmm.
But I think it's pretty clear from the independent research coverage, pretty clear from comparables. We don't trade like a junior developer. If we were just valued on Brazil, we don't trade like a junior producer if we were valued just on Argentina. We trade below that on both comparables, and even if you just take our kind of net asset value for Brazil alone and apply a multiple, that's a $1.60 share price in Canadian cents. So plenty of upside there, and I think the reason for that again is maybe Argentina, to the previous question's point, is a drain on valuation. I don't think so. But I think maybe it's because we're only 2 years into this story from a public markets perspective. And a lot of people don't know about the asset, don't understand, and haven't heard the story, which I think therein lies a bit of an opportunity. And then third, maybe the numbers were so good in Brazil that people are kind of holding back to see what will happen in the feasibility study in May, as a kind of wait and show me. That's, I think, the real explanation I can kind of say for why we're so cheap.
Yeah, I mean, there's a total disconnect between the market cap and the true value of the company, and I think the PFS in May is definitely going to be an opportunity for re-rating in the stock, and I think that's going to make a big difference. Plus, we have gold now holding on here at 19. About 1925 today, which is obviously very good for you. So you think you're all in sustaining on the PFS is going to show what for Monte Do Carmo?
Yeah, we think life of mine, it'll still be in that 600 to 650 range.
That's incredible.
Yeah, it generates significant cash flow at those levels, right? So it's a great project.
Yeah, it's a great project. We don't have any more questions in queue, so I think we're gonna leave it there. It was a very thorough presentation in a pretty short period of time. As David mentioned earlier, if you want any additional information, you can certainly go to the company's website and look at some of the other areas of Monte Do Carmo where they're going to be drilling. I think there's definitely a lot of potential for expansion at that mine. So I want to thank you for coming on today, David, and getting us up to speed on Cerrado Gold. It's definitely the right time to be looking at the company, especially with the positive outlook for precious metals, the progress being made at both properties, the PFS coming out in May. And so we look forward to having you on again in the future and following the progress of the company. But before we wrap up, I'll always give you an opportunity to give our viewers some parting words. Wait, there is one more question. Are you related to Ian Ball?
No, I am not.
Okay. No. Okay. Before we wrap up, any parting words for our guests today?
No, I would just say, thank you very much for your time. We're always available as management to answer any questions you may have. So please, I'd encourage you to sign up to the website, and you can see all the latest updates and questionnaires. But stay tuned. I think in the very short period of time, we've got a lot of catalysts coming forward. We'll have our preliminary license in Brazil very shortly. The year-end and fourth quarter financials will come out in Argentina, which I think will be quite strong. And obviously, we're really focusing on the drill bit this year, so you should see lots of drill results in the next kind of 12 months. So stay tuned.
Yeah, so for sure, and just if you wouldn't mind, just maybe before we wrap up, just recapping for 2023. you'll have continued drill results, you'll have your financials, you'll have the PFS. So it's going to be a pretty steady year in terms of news flow and potential catalyst to get the stock where you think it should be, correct?
No, correct. I mean, in Brazil particularly, it's going to be very, very busy, right? Where preliminary license, construction license, financing, and kicking off construction really before the end of the year.
Yeah, and that capex is, for those of you who understand mining, I know a lot of people on here today, understand it well. That capex is extremely reasonable for what you're getting, which is the reason why the IRR is so great. So it's going to be a spectacular project, and it's definitely in a good jurisdiction where I think you won't have to worry about some of the same issues, obviously, that you're seeing in Argentina. So if the company is going to be valued based on only Brazil alone, I still think it's way undervalued at these levels.
Indeed.
Yeah. In the meantime, you can get additional information on Cerrado Gold at the company's website, cerradogold.com, including details on the company's current projects, as well as the latest press releases.